started a trade and just rode this trend up. So now let's talk about the trend though, because this is where another thing happens a lot. Like because a lot of times what happens is we cut our runners, we cut our winners too soon, and we hold our losers too long. So we hope that our losers come back, and we are apprehensive about carrying our winners because we want to just take that profit real quick. So you see the thing we're doing, we're hoping when our players losing money, we're hoping that it comes back instead of having a set price in mind. Like for Facebook, for example, I typically, and this is just me for Facebook, this is just my example for Facebook, because this stock is highly volatile and it moves around a lot. So you got to give it some room. So I'll allow myself to go down 30%. That's how much risk I'm willing to take on for Facebook, 30% risk. So if I paid $100 for the options contract, I'm willing to allow it to go down by $30, before I cut it. But and I have stop losses set to cut it if it goes down 30%, right? So, but let's go back into this though. So when we're down 30% on a trade, instead of cutting the trade, we're hoping that it can come back. But if we cut all of, and again, forget 30%, I'm just using that as my example for Facebook, but typically let's say 10%. If my stop loss is set for 10%, that's all I'm willing to incur is a 10% risk, for whatever upside I'm looking for. When that trade is down 10%, you got to cut it. And a lot of times we struggle with that. Me as a person, as a trader that's been trading for a while, I still struggle with this. So what I do is I like to use stop losses. So when that 10%, when it gets down 10%, I'll automatically get closed out of the trade. I'll get stopped out of the trade. And if I had 10% losses in a row, and then I had a 30% or 40% win, I just erased that entire all of my losses. You know what I'm saying? So I rather cut my losses, and I'm right most of the time. So and when I say, I look at it like this, and I'm not making that as saying that as a cocky thing or whatever, like, because I tell the team all the time, I trade like I'm only going to be right 50% of the time, because one thing about this game is knowing that you're going to take losses. Because what happens is when you think you got to be right, it's harder for you to cut those losses, right? And then you end up in a situation where instead of cutting the loss and living the trade another day, you're down 50% and you're regretting, when you could have cut that trade. So moving forward, so when you see a trade like this, most people don't last in this trade because they get shaken out of the trade. So I'm gonna tell y'all some questions to ask yourself when you're in a trade like this, right? And then we're gonna go to a lower time frame, but since we're on this one and this is moving like this, we're gonna stay on here, right? So look, price gapped up the next day. It opened here and it closed here. Not much of a wick at all on the top or the bottom, because the whole body is just like it held its gains, and it closed like at the highs, right? So if I'm in this trade, and you're going to have volatility throughout the day, but if I'm trading on the daily, right, and just using this as an example before we go any further, I'm like, okay, why would I want to get out of this trade? I don't see a reason why. So I'm gonna stay in this trade. You know why? Because I'm gonna ask myself, did it take out the high or the low of, did it take out the high of the previous candle? Yes. Okay, so I'm gonna stay. And is it still bullish? Okay, cool. I'm gonna stay in this trade. The next candle, now I'm on this one. Did it take out the high of the previous candle? Okay, yes. So I mean, there's a continuation. Next candle, same thing. Did it take out the high of the previous candle? Yes. Oh, the price was moving around. It went all the way down here for a second, right? And again, the wick at the bottom, this is how low it went, but it's nowhere near, even though so price opened here. So this candle closed up here, and this one opened a little lower. So some people will jump out immediately because they see it lower than the close. So they just gonna get frantic and jump out. When I zoom out and look at the daily, now we're on the daily. Don't get me wrong, I'm gonna go to a lower time frame. I'm just using this as an example before we get deeper. And Adam, I saw you raise your hand. I'm gonna get to you in 1 second. Let me just finish this thought. So I'm like, okay, It didn't take out the low of the previous candle, and it didn't even get halfway through that candle. Because once it get halfway through that candle, then I start to have to worry a little bit, like, okay, because if it got halfway through it, then it can start to, whatever. But right now, it didn't take out the low of the previous candle, and it took out the high of the previous candle. So we're in this, and we bullish. We still in here. Now here it goes. It gets tricky. Next candle. Did it take out the, okay, so it dropped a little bit. So some people still getting worried because now they up a whole lot, right? They got three a bullish continuation, a 222 continuation, bullish, right? Next candle. Damn, price came down here, but it bounced like so. Like you're watching this happen and you're frantic. Like I said, most of the time we're trading on a lower time frame, like the hourly, and we're probably watching the 15 or something like that sometimes. But I'm just saying, depending on what we're doing. But I always go back and look at the daily, and I'm gonna go to this. I'm gonna break it down in a second. But so before I was getting shaken out of this, I'm like, did it take out the low of the previous candle? No. Did it take out the high yet? No. So it's inside. It's a neutral candle. It's not directional at all. It's a neutralizing candle. That's why it's a 1. It has a number 1 over top of it because it's inside the previous candle. So that means it can do anything. It can go either way. So I'm still in the trade. I got my stop loss because what I do is keep moving my stop loss up. So I'm locking in all my profits. I'm only going to allow myself to go down 10, maybe like 20%. No, I might still keep it at 30%, but I'm locking in the profits, meaning I'm moving up. So as my profits increase, my 30% stop loss is increasing also. So next candle, we took out the high. Okay, so we still in this. And you see, I ask myself the same question every time. Now, here it goes. This is where it gets tricky. Now, keep in mind, we all the way up here. So we made all of this money. So now when we get to another situation where it's moving a little weird, and I see this, like it looked like almost an inverse hammer, almost, but not quite. But it still took out the high of the previous candle. It hasn't taken out the low. So I'm still in here. Next day. 222 reversal. As soon as the low of this candle right here gets taken out, I'm gonna mark this for a second. As soon as this candle as soon as this candle right here, the low of that candle gets taken out by this, because it opened here, I know some shit about to go down and start, excuse my French, right? But this is called a 222 reversal. Now, what I typically do, I'm like, okay, once it takes this out, the low of the previous candle, I know it can get to the low of here. But what we got is a reversal, because now I'm asking myself this question: did it take out the low of the previous candle? Yes, I'm cutting the trade. That's just me. And it's like pigs get slaughtered. Think about it. I had a continuation. I've made profit all the way up here. So look at the price where we got in the trade. Facebook was at 194 was where 194. And we went all the way up, and we cut this trade at 226 by asking ourselves those questions every single time on each candle, right? So